S&P futures are positive after a huge reversal in the market as Ben Bernanke pledges to hold rates at an all-time low for 2 years following the Fed meeting. Overseas markets rally on the Bernanke pledge, with European and Asian markets up over 1% in early trading. Gold continues to rally, approaching 52-week highs as investors remain in the safe haven play. I'm Taylor Schrantz, and the morning call starts right now.
Good morning, I'm Scott Redler, Chief Strategic Officer with T3Live.com, and welcome to today's morning call. So a roller coaster ride yesterday, filled with volatility. Everyone was nervous. What's the FOMC going to say? What's Big Ben's statements going to come out with? And when they came out with the news, a few minutes late, the market went on a roller coaster. What it did, though, technically, it put in a first day of an attempted rally. It broke below the previous low into the lows of the year, and then roared back on volume. Now, what this has everyone talking about, is this just an oversold bounce? Is the low of the year in? Have we capitulated? Where do we go from here? What I do is I follow a strict set of retracement rules. These rules tell me the commitment to yesterday's buying. They tell me what the future direction of this market could be. To take a step back as far as what Big Ben did say, is what I liked is that he said for the next 2 years, these are where the rates are going to be. He gave the market clarity. I do feel like he sent a message to Washington to do the same thing. Come up with a compromise, something that's decisive, so we don't go back and forth and not have clarity or conviction to our statements, and let us move on. We're going to have low interest rates. Now it's time for Washington to stop the bureaucratic you-know-what and let private business start to operate. Stop increasing the debt, stop the spending, let big business, small business, entrepreneurs do what America does best, and do some hiring. So as far as the chart of the spiders and back to the retracement rules, let's take a look right here. If you see the pattern that we've been showing you, this head and shoulders top, you had the left shoulder, the head, the right shoulder. Look at the size of this decline once we broke that neckline. Technicians were calling for this. I was calling for this. If you're an active participant in the market, you could have sold here, here, and then you had the luxury of buying back into this major support. Now, I will tell you, it was not easy. This was not an easy trade for the professional, for the novice, for anyone, because the decline happened so quick and it took so many people by surprise, of the fierce in nature, that not everyone made millions and billions like everyone's going to say, the active traders or the high frequency traders or whatnot. Everyone, had some complications, but as far as moving forward, you have to have that plan so you could embrace the volatility versus having a complicated scenario with it. So what I was talking about with the retracement rules is this. What you want to see is commitment to the move. You do not want to see the market give back more than a third of yesterday's gains over the next few days. If we hold in the top third of yesterday's range, that would show commitment buying. We could even test 50% of the range, but then some skeptics might come in. If we give back more than 50% of yesterday's move, I would say the constructive nature of it would be put in jeopardy, and then that would be just an oversold bounce and just a good trade. So I want to show you these retracement rules on the screen here. So if you look at yesterday's bar, I'll magnify it here for you. So you can see, everyone says, technical analysis is a bunch of hocus pocus, but it really is somewhat simple if you use it the right way. Here's the Fibonacci retracement. If you go down from yesterday's low to the top, you will see these levels right here. You have this 60, the 0.618 retracement. So on the spiders, that's 114.74. If you missed yesterday's move, this is where some dip buyers should come in. We're down about 80 points on the open. And then this 113.90 or 114 is the 50% area. This is what I want to see hold. This can't be broken, this 114. I think for momentum to stay higher, you need 115 area. Okay, and then if this holds and we take out yesterday's high, we could see a nice move back to the 1120 or the 120 in the spiders, and then perhaps the 122, and then maybe even if we get a real rally over the next few weeks, the broken neckline, which would be very, very impressive. But let's take, one step at a time. So if we hold those retracement levels, we should see some follow through over the next few days. And if this is day one, what IBD says is from day 4 to day 7, you want to have another day up over 1.5% on heavy volume to confirm a new rally. So this way you could start buying some of those leading stocks if you haven't dipped your toe in already yesterday at this reversal, because a lot of people did buy some tier ones and the best names that we've been talking